episode of Cigars and Taxes. Thank you for joining us today. Layton Smith here with my beautiful co-host and wife, Stacey Hoffler-Smith.
Hello, everyone.
We're both partners, shareholders of Hoffler-Smith Financial in Cherry Hill, New Jersey. And we're here today to bring you another wonderful episode of Cigars and Taxes. All right. What are we talking about today?
We are talking about handling back taxes and options for repayment and relief.
Okay.
It's a hot topic.
Handling back taxes.
Yes.
Stop running. There we go. Stop imitating the roadrunner. So either way.
Running, ducking, dodging.
Oh, look at that. She's jumping in with me. It's normally me just being an a-hole.
No, that's it. Running, ducking, dodging. And listen, I literally talked to someone a couple days ago that I asked for all the IRS letters. And she said, well, I only have the last one. All the rest of them I threw away. As they come in, if one comes in, I throw the others away. And I'm like,
oh my God.
And
keep all correspondence. Keep all correspondence.
Yes.
Okay. Well, before we jump into the episode,
yes,
we're talking about handling back taxes today and the options for repayment. Mm-hmm. Thank you for joining us again. We're here in the beautiful Summers Point Cigar Lounge. They allow us to use their VIP room to record Cigars and Taxes. So Steve, Jackie, Ortiz, the owners of Summer Point Cigar Lounge, thank you again. That's it. All right, guys, it's time to get started. So sit back, light up, grab a drink. Ooh, all right, so you're drinking another one of those espresso martinis today.
I am drinking an espresso martini, yes.
We've been married like 26? 27?
It'll be 27 next month.
20?
This month.
27 years this month. Okay, wow.
This month.
Oh, my God. Okay,
right?
So yeah.
Exactly. Oh, my God.
Wait, married 27 years, but been together, what, 32?
Yes.
And then we hit the years and it was like, anyway. So she has espresso martini. I'm going simple today. What are you drinking? Are you smoking a Fat Bottom Betty?
It's not a Fat Bottom Betty. I have something different this time. I grabbed this out of your humidor.
Oh.
And it's just a St. Francis Bonum. And well,
it's a medium body stick. That's pretty good. It's actually fairly creamy. I wouldn't say it has a great taste to it, but it's
mild, and I think I was just looking for.
Okay, yeah. Well,
mild.
I think that's a medium body.
Okay.
But it could be mild to medium, but it's very creamy. Mm-hmm. The smoke is. So that you probably like that'll be pleasant. But as far as she kind of goes out a lot on you. But that might not be the stick. It might just be
the humidity. The
humidity is in the humidor. I don't have a box of those. I just had I don't know. I might have had a dozen of them, but they weren't in a box. So they're just sitting in there and might be too much humidity for them. So you're going to be relighting that bad boy. Well, either way, I have a LFD, La Flor Dominicana today, which this is the chapter 1. So it's a good medium body. It's supposed to be full body, but it's really a medium body. Good all around smoke and Basil Hayden. That's it. Really, really good bourbon at a really, really good bourbon price.
Hey.
There it is.
Can't beat that. Can't beat that.
And they're not a sponsor or anything like that. I just like Basil Hayden. We need this price. Stop shouting out everybody until we get some sponsorships from these jokers, right?
Perhaps.
Well, you know what? We sit here.
It doesn't all have to be about that. Sometimes we could just be sharing.
That's true. Doing. And that's part of Cigars and Taxes.
Yes.
Sit here, we smoke what we like to smoke. We drink what we like to drink. We pair them as best as we can with our palate. And we're going to give you some good information today. All right. Let's do this. All right. So you ready to jump on in this?
Yes. Let's get started.
All right.
Okay. First off, I just want to kind of go over what are back taxes. And I'm doing that more because I think people, if they have a tax issue, automatically they just lump everything into back taxes. There's different names for different things, but specifically, back taxes are considered taxes that are due that were not paid on time. And that can be different types of taxes: income tax,
payroll tax,
could be state taxes, anything that was due didn't get paid on time. And the problem is that you really want to get on top of addressing whatever those back taxes are, because you're setting yourself up to deal with interest and penalties,
Liens, levies.
and understand the interest in and of itself just has that, whatever that balance due amount is, it just continues to grow. I mean, the longer you don't address it. So
Okay, so we're starting this show off with the notion that these guys have filed all of their returns. They just have not paid the tax liability. They have a liability for the different years that haven't been paid, but they are compliant. They have
Right.
filed all of their returns.
which is why I made the distinction.
Okay.
This is back taxes are, you have an amount that's due that hasn't been paid. Now, it could be that you didn't file, but you know you owe. And just because you know that based on what you know happened during that particular tax year, and you are going to owe, yes, you probably will have some back taxes if that is beyond the date that it was due. However, we're dealing with right now, back taxes, you have filed, it's not a mystery, you know what the number is. And how do you deal with that?
All right. So just for clarity, we are saying that they have the returns prepared.
Yes.
They have, whether you have the returns, whether you filed them or not, you have the returns and you know there's a liability.
Yes.
Okay.
I was thinking that they filed.
They filed. So, all right. Well, I'm going with you.
Okay.
Everybody, we're talking about you are compliant. You have filed all your returns, and for the last 3 years, you owe $15,000 a year. And every time you get that letter about pay this now,
Yes.
or there's going to be this particular action, you just go hiding under a desk or something like that.
Like this?
Okay.
Okay.
All right,
So
perfect.
I think it's worth noting here, too, that for those of you who may not know, again, we do have a practice in Cherry Hill, New Jersey, and
Waterbury, Connecticut.
and Waterbury, Connecticut. And a large portion of our practice and what we do is tax resolution services, tax representation, which means that individuals who have issues with the IRS, such as back taxes or unfiled returns or an audit and multiple other things that could come up, we are usually in that role. We are supporting our clients and helping them navigate and work through that, sometimes in a facilitating steps with the IRS or state or local entities. So this space, we are very familiar with, number one. And number two, people come in the stage where you said, the
Right.
stage where I said, and sometimes it might be both depending on which year. They might have multiple years. That one year was filed, scared the hell out of them.
It ain't filed for the next 3 years.
And now that they know that they already have that same issue that caused the problem for the 1 year, they just haven't filed until.
Right. But we're dealing with right now.
Right.
You have filed all of your returns and you just have a tax liability. And what do you do with that?
Correct.
Okay, so we're not going to beat that anymore.
Yes.
It's just that
I
you
just
said
wanted
that,
people to know where we're coming from.
right? But when you said it, you know what? I fell into the same category of thinking that what you're trying to fix with all of our audience here,
Right.
which is, we're just talking about back taxes. We're not talking about compliant. Well, you're still non-compliant if you haven't paid your taxes.
Correct.
But, we're not talking about you haven't filed. You have filed, just haven't paid.
Right.
All right. Let's get that. We're done.
Okay.
We're done with
All
that.
right, so
I ain't going to ask
we're-
no more goofy questions on it.
No,
I know the
there.
client we're dealing with right now.
There we go.
I know who we have in front of us at this point.
First thing is, there are consequences to not handling this back tax issue, not paying or getting on some sort of arrangement. Okay, guys, you can't just put your head in the dirt and ignore it. You really can't. You really can't. I feel like the IRS is like the collection agency
yeah,
that has
they are.
access to everything.
No, they do.
Yeah.
That's the truth. You're
That's
not,
it.
you're not even throwing it out there.
Right.
So, it was back in the day, back in the 80s, right? I ain't going to mention his name, but another group who they were heavy on representation back then used to have these ads that went out. It was paper, they mail it to your house. So they would get the lien levy list from different counties.
Oh, right.
Of
Yes.
people.
Yes.
Because when the IRS files a liens levy, it's listed with the county that you're in. They would get those lists and send you a letter. It's
information.
public information.
Yes.
Yeah. They would send you letters. And the top of his letter would say, "Stop being a punk." Get out your bed and face your problems. Oh my God.
Wow.
And
That's harsh. That's harsh.
no. We're talking the 80s. So, we're talking.
Oh, that's true.
We're talking Commando. We're talking Schwarzenegger, Rambo.
Yeah.
Stallone. So
If people were responding to that type of communication.
that's it. Get ready for this fight.
Yes.
Yes. I used to love that.
You loved
I mean,
it.
yeah.
I'm
Because he
seeing
was
that
still trying to. He was
I'm
still
seeing
trying to.
that
move-
resonated with you, babe.
I know he was still trying to move that in the mid 2000s. It's like, listen, the audience now is a little bit more delicate.
Yes, they are. Yes.
You can't be calling people punks. You might just get sued. You hurt somebody's sensibilities.
Generally speaking,
God.
I feel like people are not quite as resilient as on the whole. And
No, you know what? It just things went too far to the left, and you had to bring it back to the middle.
True. Pendulum swings one way,
Yeah.
and then back the other way.
All right, I'm gonna stop. You were talking about the consequences.
Yes,
You're talking about
consequence-
penalties, interest,
penalties,
liens,
interest.
levies.
IRS poses penalties and interest on unpaid taxes.
Mm-hmm.
To be honest, so does the state and local. If you're dealing with a state that has local on taxes, they want their money. That's it.
Wait, no, that's not it. You also have the embarrassment factor. You have the liens, levies. Let's just say they're doing
So that was my
offsets.
second saying liens, levies, and prolonged on payment. And I said, it says legal action. I immediately think of some of the celebrities where, anyway.
Okay, I was going to let you go on with that thought, but you stopped. You stopped.
I believe it.
Okay, so what I was mentioning is some of the more embarrassing pieces, which is, hey, you can contact your employer about offsetting your pay.
So this comes in with the liens and levies.
I know.
And I'm just for the audience. I'm
Sometimes
just
you just
clarifying.
throw out liens and levies, and folks are like, oh, all right, whatever.
Right. But
now
that's what that means.
That's it.
You may get a letter that says, typically it's going to say notice of intent to levy. And if you think, oh, well, I don't really have anything in my bank account, or cool, gotcha, I'm not going to put anything in my bank account. If you're working or if you are getting income from anywhere.
Yeah, they can go. So it's not just your employers.
Right.
If they have identified contracts, vendors that you have that might owe you revenue, they can contact them and say, hold all of the payments for this particular entity or this particular individual.
Right.
Send them all over here to the state or send them all over here to the IRS.
Right.
Now all of a sudden, that's the embarrassment
in your
factor.
business now.
Yes. Now the
They
people
put
that
all your business out there. I'm sorry. Go ahead.
It's all right.
That's it.
Stacey's on a roll.
No,
but
wait, don't
the embarrassment factor. I'm not sure you're going to hit that, but
Yes.
that's real. Now you have contracts with people. You're talking about. You have your employer, and they have these letters saying that, hey, we have to hold your pay or hold a certain percentage of your pay. And then you get into those uncomfortable conversations. If you work in banking or the financial sector, that could be problematic.
That can hurt.
That can be very problematic. So we ain't going to belabor the point, but I just wanted to hammer that home.
Right.
Well,
I think
Stacey's
also-
going off on her horse a little bit here.
No. I do want to add, too, that even beyond the employer or vendor or colleague situation, definitely those things, that's real. That's real. Sometimes it's a little closer to home. Maybe you are the main person that handles those issues in your household and your spouse isn't quite aware of what's going on.
Okay.
How about that's the truth though, because I've seen that where maybe the individual is let's just say husband and wife. Husband is self-employed. The wife is working W-2 job, maybe, I don't know, teacher or something. And he doesn't get that. He doesn't get the letter. Or she gets a letter. They both get a letter and they're looking to take some of her salary.
Yeah, so let's just really put that in perspective. What we're saying here is you have a husband that's self-employed. They owe taxes for these particular years, and the wife has determined that they owe taxes and it's his fault. Okay. Now, they have not identified vendors that they can go after for him. They haven't identified, because it's just say he's a gig worker.
Yeah.
They haven't, there's no places they can touch outside of going after the bank accounts per se. So what they do is, because they file a joint return, they go after the wife's salary. Now what happens is you have tremendous problems at home.
Yes.
That's when we see most of the folks coming in. because
that's why
the wife is just all wholeheartedly
That's
upset.
why I put that example out there.
All right.
I have also seen them levy Social Security.
Yeah, not quite as, you don't have that. I don't see that as much, but yes.
I do
they
see
can,
it,
yeah,
though,
they can, yeah.
you know,
I'm just saying, I don't see that
which
as-
kind of stinks because typically it's not a whole lot of money anyway. But if they're not able,
it is
to
what
get
it is.
they're not able to get it. That's what they do. Okay, so first steps in addressing your back taxes. Review your IRS notices.
Yes, all the letters you threw away. Now you need to go back and review them.
That exactly. That same young lady that I was speaking with, I cringed when what do you mean you threw them away? So now if you work with somebody who's a power of attorney, or if you call the IRS yourself, which a lot of people aren't really that keen on doing, but if you do, they can help you get a sense of where you are, where you stand.
You're not going to get copies of those letters.
But you won't get copies of the letters.
No.
That's the thing.
But you can look at the transcripts.
Right.
And to figure out exactly in that process where they are.
Right.
Yeah.
Or you'd have to be on the phone with an individual from the IRS, which is not sometimes the most comfortable situation because when you call in, their first thing is, when are you paying? And maybe that's not the conversation you wanted to have first. You wanted to get a lay of the land.
Right. And they can also just, like you said, get a power of attorney.
Right.
A power of attorney, whether it's actually, a power of attorney can be an attorney, an EA, a CPA. A regular individual can also be a power of attorney. But the individual, the taxpayer, must be on the phone or in the presence of the revenue agent or revenue officer while you're having that conversation. And the goal of having a power of attorney is to keep your client away from them.
Yes.
That's the goal.
Yes.
Well, that's our goal.
Yes.
All right.
Yes.
Not everybody's goal. I am only speaking on behalf of Hoffman Smith Financial Services. Let me stop there. I'm only speaking on behalf of Layton Smith. So,
no, that's the goal of our company. Like when we are in these engagements for clients, the whole point is
do not speak to anybody.
That's it.
You just give us.
Somebody calls you.
You give them our information. They need to call us.
Correct.
Yeah.
Yes. You want to verify the amounts. So that comes back to, you can do some of that with the IRS notices. That'll give you at least a ballpark, depending on how old the notices are. But you want to verify what are the amounts that you owe for which particular tax years.
Yeah, at a minimum, verify the original tax liability.
Yes.
Okay. I'm not going to say don't worry about the penalties and interest because, you could have had a $40,000 tax liability. You haven't done nothing with it in 5 years, and now it's $51,000.
Exactly.
But still understanding the original tax liability and verifying that it was accurate. Okay. We're not talking about, SFRs, returns that the IRS filed for you, stuff like that.
Yes.
But these were accurate returns.
And to clarify, SFR, substitute for returns. That's something that the IRS will do if they've asked you to file a return. And I sent you a few letters saying that we haven't received your return, they will take the liberty of doing it for you and coming up with some exorbitant number. Typically,
Well, they have your
designed to motivate you into.
That's not their official purpose, but they take your gross income and you're taxed on that without any of the normal or standard deductions. Okay, and then when you go in and you file your return, it just replaces the SFR.
Right. The next thing, you need to contact the IRS. Now, I say that, and again, we just spoke of having a power of attorney, right, a representative of some sort, contact the IRS on your behalf. However it works, you want to do that. And that kind of feeds into my next piece, which is consulting a professional.
Oh, before you do that,
yes,
I just want to jump. One of the big things. So we're talking about folks that have tax liability. This cigar is smoking, ain't it? Oh my God. It has to be a little dry. But either way, I'm trying to hold it to the side so it doesn't cloud all the cameras.
I'm having to relight this thing. I can't put it down for 20 minutes.
So my cigar won't stop smoking and yours can't keep it light.
Can't keep it.
All right. So one of the things I wanted to just mention is, a lot of times you have these liabilities. One of the first conversations that honestly do happen is, well, what if I just file bankruptcy? Okay, and you're about to talk about consulting a professional, which a tax attorney, EA, CPA, they're all in that conversation.
Right.
But I just want to clarify to the masses, bankruptcy does not immediately or automatically get rid of tax liability. The bankruptcy can very easily get rid of penalties and interest that has been accumulated on that tax liability.
Right.
All right. But it does not get rid of the liability. Now, there are certain tax obligations that can be discharged, but you're probably playing more with the CSED, the statute of limitations.
Yes.
And that'll go through the bankruptcy piece all on its own. But just to get rid of that misconception, I have a lot of people call me and they go, what if I just file bankruptcy? I was told I could just file bankruptcy and get rid of this. And then the first thing is, that's what everybody would do. All right, literally.
Everybody.
I wouldn't pay my estimated taxes, file a return, and then file bankruptcy. Okay,
Yes, we wouldn't have a job, wouldn't we?
Oh my God. Yeah, that's it, right? There we go. But all that being said, bankruptcies does not get rid of tax liability, not directly, not automatically. And it depends on the type of bankruptcy you're in, whether it's 7, 11, 13, whether it's individual or business. 7, I believe, discharge. The other 2 are more reorganization for the business and the individual. But you need to talk to an attorney about that. I'm not an attorney. All right. Just talking in general here. But it does not get rid of the liability. It does, though, place a stay on collection.
It does.
That is the only thing it automatically does, okay? Which means all collection activities, it does stop when you file bankruptcy. But that is really the only thing that is real out there in that, universe of information.
The one thing that's a slight detriment to the bankruptcy also, and that's for those who might be interested in, I heard about that statute of limitation that is on there for 10 years. It does extend out that time frame.
Yeah.
So
you don't get to play that game.
Yeah, that's the thing. So you should know that.
Oh
so
my
if
God.
you got something.
Think about that. Years ago, we had people that would file bankruptcy. They didn't see through, I don't know how it works, but they filed bankruptcy. They didn't see through the process, but it did stay the activity.
Right.
And then the bankruptcy, I think, got thrown out.
Right.
And then they go file again.
Right.
Because if they thought they were playing with the statute of limitations, I don't know if they thought that's what they were doing. Or they were just, that's just dumb. But I remember having that conversation on, what about the statute of limitations? Like, every time you file bankruptcy,
you stop the clock.
You stop the clock.
That's it.
You need to go back and talk to that attorney. That's interesting.
Right.
All right. Go right ahead.
So I don't want to beat a dead horse to say that again, but consulting a professional when you are dealing with this you really need to do that because for one, that person can explore with the IRS and do some research on what you owe, how, the tax years associated with it. And really, once that person, particularly if it's a tax professional, has a good idea of what the lay of the land is, they can make some really good recommendations for you as to what you should do next.
Yeah.
Okay.
All right.
So the first step is getting a clear understanding of where you stand. So you want to do that. So next up is, now that you have a clear understanding of where you stand, there's some repayment options that are out there. You got a few. Some probably you've heard of, and some maybe less popular, but we want to hear of anyway.
The Fresh Start Initiative.
Oh my God!
Everybody in the moment. Fresh Start Initiative.
I heard there was a Fresh Start Initiative. Can I get in on that? But I have to tell you, the IRS has done a magnificent job marketing that, as a thing, and so people they don't know anything.
I don't think the IRS has. I think that's the individuals.
Is that it?
That's a marketing.
That's a marketing thing.
Either
way, it's worked. It's worked. Anyway, first up, installment agreement. Okay, and this is, I'm referring to just a regular basic installment agreement, 72 months.
That's the streamline. So, okay, let's jump in here.
So I said regular.
So you have your automatic installment arrangement, which means you're under $10,000. You're going to repay this within 3 years.
Yes.
Or along the CSET lines.
Right.
Okay. Then you have your streamline installment arrangement, which is part of that Fresh Start Initiative. Okay. Which means you owe less than $50,000.
Yes.
And you're going to pay that within 72 months. 72. Or along the CSET
right.
lines, which means within the statute of limitations, whatever is least. Okay, right. 72 months or statute of limitations.
The IRS is somewhat pretty aware of that CSET deadline. They're not.
I mean, they know that. It's calculated.
They're not trying to let that fall off the
when
table.
when you call in, they're looking at your name, they're looking at the liability, and they have a CSET date right there. It's not like they don't know. They know that immediately.
Right.
But you have your automatic installment arrangement, $10,000 or under, 3 years or along the CSET statute of limitation. You don't have to give them financials with that. Okay. So we'll jump into the 433A and B, the financials, but no financials. That's an automatic. The Streamline, which is part of the Fresh Start Initiative, 50,000 or less, 72 months or along the CSET guidelines, it's statute of limitation.
Right.
And Streamline has to be paid direct debit. You cannot mail checks in. That has to be paid direct debit. Then you have your regular installment arrangement, which, you go to the regular installment if you owe more than 50,000, okay? Or, you can't pay, you need to pay a lesser amount. So let's just say let's say you owed less than 50,000, okay? And they came up with your monthly payment needed to be $500 a month, whatever. But you're like, I don't have $500 a month. The best I could do is $298. Okay, so now you're kicked out of the Streamline installment and you're into a regular. You need to give them financials. You're showing your monthly revenue, your annual revenue, your monthly expenditures, your annual expenditures, and you're coming up with your available income that can go towards the taxes. So whatever that number is, that's your financials. Whatever that number is, that's what you would pay with the regular installment.
And to clarify, that income and expenses that you have, they're looking at the current year. So even if that balance due you have is from last year, years ago, they're interested in what do you have now that is available to go towards that balance.
That's true.
Okay.
But once you go on a regular installment, okay, and you'll jump into the partial pay installment.
Yes.
But once you go on a regular installment, let's say you had to give them those financials, that plan is set in place. It's in place. They're not going back next year, because you got a raise. You would have to issue new financials to them because you had a change of life and you need the payment to change. You could always send them more, but if you need to send less, you have to give them a new set of financials with the regular plan.
The other thing is if you have a new return that has a new balance due.
You must pay that by the due date.
Otherwise,
the plan is broken. So you're on a payment plan, you owe $40,000, you file this year, you owe $6,000. You need to pay that $6,000 by the due date. If you do not, it will break the plan that you have in place.
Yes.
And one of the guidelines, and it is somewhat laxed, okay, but in all of them, the automatic, the Streamline, Fresh Start Initiative, the regular, it also has guidelines in there for you are not on a payment plan that was broken in the last 3 years, 5 years. But that I've seen that that's very laxed.
Right.
I have folks that go online and fill out the installment, the 9465 form with the IRS, and they do it year after year as they're breaking their plans. Okay, so I know that that's a reg there, but I'm going to say that that's lax because these folks keep breaking plans.
I think you're right on that. One of the other regs, just to clarify, the reason that you do need to pay it if you do have a new balance due is you are not supposed to have a balance due on your return going forward. It literally says that on there.
Or if you do, you're paying it by the due date.
So if you have it,
you can have a balance due. It just has to be paid.
It can't be lingering.
Yes.
Okay.
Yeah, you can't be non-compliant.
Correct.
That's it. It must be paid by the due date.
Right. And let's say that just as a for instance, if that does happen, like you said, you have a payment plan. You got it situated. You're like, oh, good. Okay, I can deal with this. And now your things, the dust is settled. Now you have the next year that comes through.
And you owe $25,000 that year, too.
You owe, let's say it was $10,000, $6,000.
And you only got $3,000 to pay towards it.
Right.
You just broke the damn plan.
You broke the plan.
Yeah.
Yes. And it's pretty quickly after, I won't say quickly because IRS, I don't think
It's about
really
30,
does.
only 30 days.
30.
They send you the letter saying pay this balance in full.
60, and
Yeah.
they tell you that your plan is in danger of being revoked, or it might be revoked. So, but they send you a letter saying that, and
there it is.
That's it.
That's it.
That's it. Okay. Since we were talking about payment plans, I think I want to skip to partial pay.
Partial pay? Okay.
Yeah, so that's
I
the
love partial pays. It's
Yeah.
I don't want to. Didn't we do a show on it? But didn't we do an episode on that? No, we talked about it.
we talked about these options in a little more depth. So we're just kind of
Let me give an example to explain a partial pay install. That might be the easiest way, instead, so that we're not talking for 2 hours today.
Sure.
So I had a client owed about $400,000, and we put together the financials. And this client, let's just say, had certain contracts, was making a certain amount of money 3, 4, 5 years ago, wound up owing like $20,000, $30,000 every year. Either way, got up to $400,000 they owed, and we put them on a partial pay. So we did the 433A for the individual and a 433B financials. I'm just going to assume you know what they are, okay, to try to make this quick. And those financials showed that available, they could pay right around, $1,000, $1,100 a month. And that partial pay installment allowed them to pay that $1,000, $1,100 a month going forward for the maybe it was 6 years.
Okay.
And as long as the income didn't change, that plan could stay in place. At the end, what the partial pay allows that the other plans don't is it will allow the statutory expiration of the debt. So that person literally could have gotten to the end of that plan and only paid in like $90,000. Okay, and
before the rest of it fell off.
yes, before the statute of limitations. Now, the one caveat with the partial pay installment arrangement is you're supposed to give financials every year that shows what you have available to pay. That has been, in previous years, it was laxed. I'm going to say from the 2010s through maybe the 18s or 19s, we had folks that we put on PPIAs, partial pay installment arrangements, and we never had new financials requested of them to stay on that plan.
Right.
Now, we put people on that since the COVID year. Just a couple of years ago, and they have literally made 12 months, and it's like, your plan is about to break. And it's like, what the hell? I didn't miss a payment. But it's, we had to resubmit new financials so they can stay on that pay.
Yes.
So partial pay installment arrangements, if there's going to be no change to the income and you had a certain amount of income at one point that you're not going to go back to, that could be very easily a really good solution for taxpayers. But you are dealing with your professional year to year to stay in that PPIA program.
Yes.
All right, I hope I explained that well.
Yeah, that's fine. And just
We're going to get some smart asses out there. Well, Layton, listen, there's a couple other caveats here and there.
Right now, we just don't have the time to go through all
I know.
So I'm kicking that out there.
And also, you got to understand, we're talking from a perspective of work we've done for our clients and how these cases have gone.
Yes.
So there's certain things, certain areas that fall within the IRC that we've never touched.
Right.
We just don't have those type of clients or those clients with those particular issues. So all that being said and done, before the smart asses try to be picking apart anything.
So, I think you covered that really well.
I believe so.
Yeah.
I just gave a perfect example of a TPI. That was a couple of years ago, but that was listen, that particular case, that particular client, that was one of those, oh my God. Okay. This dude was talking about leaving the country and shit, all this old extra stuff. Yeah. And I hope we don't ever watch this episode.
To be fair, we've had a few that have said that when it was.
Oh, yeah, that's true. Nah, you can't pick them out. Can't pick them out. But all that being said and done, that was a tremendous win. That was a tremendous win. That was a good case. That was a really good case.
Yeah. So since you're talking about that, currently not collectible, got next.
All right, same difference.
Yes.
Not same difference. All right, it's not even similar. But you do have to do your financials, the 433A and B again. And just to understand this, when you are considered CNC, so you owe the IRS 400 grand. And we go by their guidelines of what expenses you can write off and deduct. And we come down to with the income that you bring in and your expenses, there is no available funds.
Or maybe it's even negative, very clearly
It's
negative.
And, you can't borrow money from nobody. You can't pull money out of your home. You don't have assets you can sell. Your mama can't loan you money, all those other cool things. And then what happens is you can be deemed as currently not collectible. That does go year to year. And what that means is for this particular period of time, they are going to stop all collection activity.
Right.
Okay. That's all it means. Right. In 12 months, you're going to get that letter. What's good, man? I would let it go say, what's good, man? All right. And basically, you're going to have to start that process all over again to be deemed currently not collectible again. Unless we've had some individuals who've had, life-altering things happen, accidents and such, so that their capacity to work has been diminished completely.
Yes.
So in those cases, those clients, they just stay on CNC. Even though the IRS could ask for new financials, we've seen it with those clients. The IRS has not.
Right.
Because they're looking at the medical situation. Right. I'm assuming.
Yes.
Yeah.
Yes. So, and I think it's worth noting, just for anybody that's listening, we've talked about a big integral part of this is showing the IRS that your income and your expenses, and through that calculation,
you do not have the ability to pay.
Right, that there is nothing left, or very little left, much less than what they would be requesting from you monthly, okay, or nothing.
Right.
Please understand, they are not simply going to take your word for it. Okay. Now, I feel the need to mention that because I have had people say, well, this is really hard, and I got this to do and this to do. Literally,
so to give a firm example,
they want to see the documentation and to go through it. And even when they do, they will still typically ask. Yeah. We've had people ask for, well, are you sure they can't get a second mortgage on their home? We need to see a rejection letter just so that we can check that box off that we confirm.
That's true.
So it is not simply that you...
Right. So those taxpayers have to show that they do not have the ability to borrow. Okay. Even if you have equity in your home. So let's just say you own a home and you owe $180,000, but the house is worth $300,000. You have $120,000 in equity, but you don't have the credit to be able to get that HELOC. Yeah. So we have to show, we ask them to go to their bank, any bank, and just put in an application for the HELOC, get the denial letter, because that's what go into that package with the CNC. Yeah. All right. Now, if you have assets and there's nothing owed on that asset and they can be sold, that can be problematic.
They're gonna
be problematic.
It can be liquidated.
Yes, that can. Sold. It depends on the amount they owe too. Okay, or how serious. And then once we get to the point where they're looking at the assets, we just come up with an amount that we can pay them. Right. But all that being said and done.
So we don't want to retirement account. So I think
can you pull from your retirement account also?
Can you borrow or get an early distribution from it? They're looking to see what is available. Again, they have your social and they have access to everything.
Oh, good Lord. Stacey, come on, Stacey. Let's go.
No, I'm just saying.
I know.
All right, so last one is offering compromise.
Oh, good Lord. We can spend an hour.
We could, but I thought this was a natural progression.
True.
Into that. So,
offering compromises, well, you have a few, there's three, but the two most popular offering compromises are offering compromise, a doubt to liability, and an offering compromise, doubt to collectability.
All right. Well, let me start out by saying what the offering compromise is.
Oh, I jumped too fast.
A little bit.
Go right ahead.
This option allows you to settle your debt for less than what you owe. So,
that pennies on the dollar that you heard about. Pennies on the dollar.
Well, actually, penny, and the IRS is strictly forbidding folks like us or anyone to say pennies on the dollar in their marketing at all. But that essentially, you owe, for example, $100,000, and you say, gee, can I pay you $100? That is a bad example because they would never, I think it would have to be pretty extreme for them to take that. But that's the idea.
The person's on their deathbed. Literally.
Yes.
That's what's happening.
Yes, but
you croaking out in about 3 days and there is no estate.
But that's the idea, that you have a significant amount due. They want it. They've been, oftentimes, relatively aggressive, or letters that you got, that you owe this money. You have no way to pay it. Can I offer you something else? And then sometimes you end up completing the same form.
The 433A. Well, there's other forms for the offer those forms there too.
But the idea is demonstrating your income, showing your income, showing your expenses each month, and demonstrating your ability or inability to be able to pay.
Right.
And you have different grounds of why you're presenting this offer in compromise, and that is where you started.
Now you want me to jump at that point?
Doubt to.
Okay. So all I was saying earlier is there's a couple different offers out there. There's 3 in particular, but the 2 most popular is doubt to liability and doubt to collectability. Now, the difference between the 2 are we will normally use doubt to liability when, let's just say you were audited. And you scanned it in a mug. So you just did not go to that audit.
Right.
You didn't go to that audit. It was like 4 years ago. You missed all of the appeals rights that you have. This debt is debt. You got the letter saying you had 90 days to send it to tax court. You just skipped out on that also.
Right.
This debt is sealed. All right. You don't have those options. But you can do something with the doubt to liability because you had that audit, you never showed up. They treat it as a hobby. You got credit for all the revenue you made that year, and you were denied any expenses.
Right.
Okay.
Sometimes they'll even take your dependents off, depending.
Yeah, dependent. Yeah.
They a lot of times they will strip everything that helps you.
You skip out on an audit, and they will literally take away all your Schedule A items. They will take away all the expenses on this. Make it standard. Right. And take away the expenses from the C if you had. So basically, that's the doubt to liability. Yes. It's in the name, doubt to the liability. You say I owe $50,000. Honestly, if I'd gone through this process and I probably owe more like $15,000.
Right.
Okay, and that's the basis for the offer. And then you have doubt to collectability, which is that there's a doubt to this will ever be collected. So I want to make an offer to close this out. You owe $50,000 and, your company's gone. You were in an accident. Your ability to earn has been reduced by, 90%.
Right.
And, we're not talking the pennies on a dollar stuff. And just to jump on that a little bit, one of the things I want everybody to understand is most times when you see people advertise offer and compromise and they say words like pennies on a dollar, those are marketing firms.
Right.
That is not somebody who is licensed or certified in any given manner. Those are marketing firms.
But they can lose it based on that.
That's it. So all that being said and done, doubt to collectability is we're just showing what you can pay one time lump sum or within a certain period of time to close out this liability. But, over the span of 6 years, you're not going to be able to pay this liability, doubt to liability.
Right.
And the third one we've never used. Those are the 2 offers that are most common.
Right.
Yes. Right. In the thought of time, since we're pushing like 45 minutes now.
Okay. Well, I think that's mostly it. Some of the other things that I had on here were going more deeply into that, but I actually think we did that. So,
I know we didn't talk much like the penalty abatement.
Yeah, that's the last thing.
Yeah, penalty abatement. Yeah. So the one big thing is this. There's quite a few different versions of penalty abatement. So you owe $50,000. 10,000 of his penalty, whatever. There's first time penalty abatement. You have different hardship penalty abatement. Let's say like a special COVID year penalty abatement, if you owe for that particular year.
They're what?
You have the ability to file for penalty abatement. Now, understand, if you are applying for streamline or automatic or regular installment arrangement and you're doing a penalty abatement, perfect. When you jump into the whole, you're doing a partial pay installment or you want to do an offer and now you want to play a little bit of a game, you want to do the penalty abatement, try to get a little bit lower and then you want to do the offer. All right, that irritates them. That irritates them. Do not.
Mm-hmm.
You know, you just pick one lane or the other. If you're going to go on a regular installment, automatic installment, streamlined installment,
Mm-hmm.
penalty abatement, that should be added in there automatically. Your professional, they'll tell you. They're going to, file for the penalty abatement for you. You're looking to do an offer. You're looking to do a partial pay installment. Yeah, you just skip that whole penalty abatement process. Now, I know there's people who will sit out there and say, well, hey, it had that I owed them $200. If I get the penalties abated, now I'm down to $160, and now I'm gonna do an offer. No, just do the damn offer on the two, okay? And just go. It'll keep the process cleaner.
Right.
It'll go through a lot smoother, in my opinion. Okay, with the cases I have worked on, and there might be attorneys out there, and this is just what they do, or CPAs is just what they do. They always file a penalty abatement. Get approved for the penalty abatement, then irk the whole hell out of that revenue officer by sending an offer and right after. And it's almost like, why did I go through all this to approve the penalty abatement? You're going to send me an offer right after. But normally those conversations flush that out. Normally they're talking with the revenue officer. That doesn't happen.
Correct.
Yeah, that doesn't happen.
Yes.
But, you'll have individuals who are working on their own maybe, and they're highly intelligent. So you're going to file penalty abatement and then turn around and try to do an offer afterwards. Don't.
To be honest, I feel like sometimes depending on the case, it's an extra step. And if the end result is they're going to
Have an offer anyway.
Yeah.
Partial pay.
what was the point? You're almost prolonging everything because nothing that the IRS does is immediate. So, you put this offer in, you put the penalty abatement request in. That is not like you put it in Monday, you get an answer by Friday.
Yeah, we have never done an offer that's been approved in less than, I'd say, 6 to 8 months.
6 months at least.
Yeah. I think a lot of ours have probably gone almost a year.
Right.
Maybe not the ones in the recent years. Since COVID, they've gone through quicker.
A little bit.
Yeah.
A little bit.
But we're still talking 6 to 8 months.
It's not fast.
No,
It's
no.
not,
It's a process.
It's not a fast process.
It's not.
Yes.
All right.
Okay. All right. So I think that pretty much is it. There is a first-time penalty abatement. That is a type.
Oh, I missed that one. Right.
That's a type of abatement. It's kind of easy to request. And if you fit the criteria, then, it might be something that can be done. That would be one that would be quick. Well, if you can. But you do have to have a clean compliance history. You have to, for any of these abatements, you do have to have all of your tax returns up to date.
Yes.
If you
please do not ask them for a penalty abatement and you have not filed since 20.
Well, they'll tell you that right off.
Oh my
before
God.
You get too far in the conversation. The other thing is, if you are supposed to make estimated payments, you need to have those made and logged in.
Yeah, you need to be compliant with that also.
You do. For a first-time penalty abatement, you cannot have requested that in the past 3 years. So, first time in 4 years, we potentially could ask for it again.
It could be denied.
You could still be, but I'm saying that particular criteria is every 3 years.
So we say every 3 years, but a lot of times they look at the history, which is you filed 4 years ago, and you did not file a return for the last 3 years. You just filed them all, 2 months ago.
Well,
and now you're going for a new first-time penalty abatement. It's like, no.
Right.
Yeah.
Well, because the other thing is there's certain things that they cannot see on your file for the last 3 years. So if you are filing late like that, you're going to have these other issues. So,
that's it.
But it's worth checking. Worst they can do is say no.
Yeah, but the big thing is this. Listen, with all of the topics we just went over, one of the things that we can't stress enough is you should be looking to, if you're in this situation, get professional help.
Please.
Talk to an attorney.
Yes.
Talk to a CPA or someone like us in EA.
Right.
And an IRS enrolled agent, certified public accountant, a tax attorney. Get help with the matter. And listen, I know the kids love TikTok University. Okay. But understand, that's not where you should be in this situation. You should not be on TikTok University.
No.
What you should be doing is seeking professional advice. All right. Now, listen, if you owe under $10,000, that's straightforward.
Yes.
Honestly enough, if you owe under 50, that's still somewhat straightforward as long as you're compliant.
Everything is perspective.
That's it.
You
So
know,
I will say,
if you feel like, wow, this is like insurmountable, you know, just think of it. But yes, I think a good benchmark is, 20, 30, 40, 50.
Yeah.
You probably want to just check.
I got it.
Yes.
Fight or flight. And if your normal mode is flight, you need to get professional help. All right, there we go.
Yes.
All right. So with
beyond that too, just again to know what your options are and you want to get somebody that you can trust, that not just did a Google search, AI search, well, however it is, but somebody
will say that. That's how we get a lot of clients. They go on Google, read our reviews, and then come on in. We do.
I meant, okay, so let me clarify. I meant a person that just searches Google to find answers for you. That's what I meant.
TikTok University.
Yeah, or something like that. You need to have somebody you feel comfortable with, because this is personal information, right? They're going to ask you some details that, maybe you don't normally share with somebody. But guess what? You need to be as forthright and as forthcoming as you can so that they can help you. Okay?
And I'll just add that TikTok University is a wonderful resource. And,
What?
Oh, listen, it's a wonderful resource.
Okay.
I'm not sure we should just be shitting on it. So all that being said and done, TikTok University is a wonderful resource. We have nothing against that. We're just saying that if you're in a particular situation, that sort of free, random, unfocused advice might not be the best place for you. And with that, we are concluding another episode of Cigars and Tech. Oh, I'm sorry. Go right ahead.
No. So my thing is, speaking to a person is going to be a better option for you than TikTok University, I think, in most cases. All right. So I will leave it there.
Yeah. Oh, okay. I got a better one.
Oh, my goodness.
So listen, you're on TikTok University, right? I know, right? You're on TikTok University. If someone just gave you financial advice, and then on the next video, you see them doing a new dance shit, don't trust that. Don't trust that. Okay. And in the next video, they got a dancing cat and their grandmama. Listen, you get what you get. Oh, look. All right, guys. Listen, this has been wonderful. I hope you enjoyed. I hope you enjoyed the episode. We've had fun with this. I know we threw a lot of information at you.
Yes.
Hopefully it can be helpful to you. But in all cases, please check in with your tax, accounting, financial professional on these particular issues to find a solution, a plan. Have them put together a plan that'll help you out of this.
Yes.
All right. Any questions, please send us an email at info@cigarsandtaxes. And I am going to leave it there. Any last words, Stacey?
If you like this episode, please comment, subscribe, and share, especially if you may know someone that this information might be useful for. Please share it with them. And with that, I don't have anything else.
That's it. Okay. All right, guys. I'm going to go and start my cat dancing episode. Give financial advice and then start dancing with a cat right after.
Okay, well, I'll leave that to you. All right. So, all right, guys. Have a good one. Till next time. Are you struggling with back taxes? This can be so overwhelming for so many individuals. And there are options available, but which one is right for you? We're here to answer that question today. We're going to navigate through all of the different options that are available for handling your back taxes and hopefully reducing some of that stress and anxiety associated with having this issue kind of looming in the background. Stay tuned while we go through all the information that you'll need here today.